Welcome back, everyone. The next session we have is how to promote your business to investors. With us today, we have Uwemakpan, I hope I pronounced it correctly, Fund Operations Ingressive Capital in Nigeria. Uwem is a startup coach and investor in early stage startups. He helps entrepreneurs gain the clarity they need to turn their ideas and passions into profitable businesses. He's the director of fund operations at Ingressive Capital, a venture capital firm focused on funding the next generation of African innovators across sub-Saharan Africa. If I'm correct, prior to this, he served as the entrepreneurship program manager and founding the team of the largest Pan-African entrepreneurship program, $1 million initiative, the Tony Elimeli Foundation, where he trained and mentored over 10,000 entrepreneurs from across Africa. Uwem is now focused on building entrepreneurship ecosystems that empower African entrepreneurs to be the best they can be. Over to you, Uwem.
All right, thank you, everyone. Let me quickly share my screen. Please confirm that you can see my screen.
Yes, it's up on my side.
Awesome, awesome. It was an amazing first session with Zach. Met Zach sometime last year or 2 years ago in Lagos, and he's such a big influence in the entrepreneurship ecosystem. So why are we here? We're here to talk about how to promote your business to investors. Louis has done the intro, so I'll just skip this. And just say that I run operations as Ingressive Capital, and Ingressive Capital is focused on backing the next generation of innovators across sub-Saharan Africa. For most of you that keep news in the ecosystem, one of our portfolio companies called Paystack got acquired by Stripe, and that's what we intend to do, back these early stage companies that go on to create value and then get acquired by the bigger companies. So entrepreneurship, everybody screams, oh, you need to start your own business, especially in this part of the world. Oh, you need to, you have a great idea. Why don't you start a business? Why don't you build this app? Why don't you build this platform? But the truth is entrepreneurship can be a very brutal game. And to stay alive, you will need a bit of boost. And that boost is financial input, right? You need some sort of cash input to stay alive over the course of your startup journey. And before I even continue, I'd like to say one thing. Investors are not all-knowing. Oftentimes, people make that mistake of thinking that because these are institutional investors, they know everything. They know how to predict the future. They have a crystal ball to tell them this is going to be successful or not. I can tell you for a fact that venture capitalists and investors make way more mistakes or get a lot of their calls wrong than when they get right. What they just do is maximize their upside. So when you are pitching to investors, when you're speaking to investors, when you're looking out for investors, always try to show us the reason to back you. I know why your solution is, well, not why your solution is the best, even if that's one of the things you see, but don't pitch to investors with the thought process that the investor knows everything about the solution. In short, investors tend to crowdsource opinions and crowdsource, they crowdsource opinions about the companies that they want to invest in. So how do you get investors to notice you? The very first thing is you have to be very clear about the problem you're solving. Does the problem you're solving need of the customer? And is there even a need in the market? Is one thing to say you're solving a problem, is another thing to have a mass of people with that problem or willing to pay you for that problem or pay you to solve that problem. So have you clearly defined what the problem is? And then do you have the facts to back it up? You can't just go look for an investor or pitch to an investor and you don't have facts and figures. Even if your business is an idea, you must have done your research. You must have gone out to speak to the customers. They must have told that this is their problem. You must be able to. What is that reason you're trying to make their life easy? What is the problem you are trying to solve? And then secondly, you must know your competition. I listen to so many entrepreneurs over time, and sometimes I hear people say, I don't have a competition. There is always a competition, and that's a fact. Something is competing for the time, something is competing for the resources of your potential customers. So you need to know who you're competing with. And oftentimes investors want to know who else is playing in this field. Now, competition doesn't mean that the competition exists, doesn't mean that you will not succeed. In the first session, Zach talked about incumbents and how new startups came and were rethinking how to deliver value to customers. Because competition exists doesn't mean that you will not do well. So you need to research, do your research. And another thing I see people miss out on is that they don't do research on the portfolio of the investors that they are speaking to. It's very, very important. So many times there might be a conflict, or the investor is also looking to maximize their upside by investing in a similar business. But it is important that you do your research on the investors and know who in their portfolio is a potential customer competition, and who in their portfolio can you deliver better value than. So it's very, very important, know your competition. And thirdly, this is a very, very weird point, because I see that, I mean, to start a business and to identify a problem to solve and build a product, oftentimes you fall in love with the product. And because you are so passionate about creating a product, creating a platform, or delivering a service, you are stuck on the product you're building. However, the customers should define what products you're building and not you. I tell entrepreneurs a lot of times that you're solving the problem from the perspective of the customers and not yours. Because if you are stuck with just your perspective, you miss out on the changing trends in the market. You miss out on the trends in the niche that you are trying to target. So listen to your customers, find out their pain points, what are their preferences, what are their buying patterns. And interestingly, buying patterns change over time. So the buying pattern of a young graduate from college 10 years ago will be way different from the buying pattern 10 years after, because by then it's probably working, has a family, and the buying patterns will change. And then with that information, you can now build a specific solution for that. Investors want to see that. Investors want to see that you can pivot, you can adapt your product or your service to competition, you can adapt it to the economic times. I mean, look at this year, how COVID came and, I mean, destroyed people's production and all. Yet in this period, certain businesses succeeded. I mean, look at Zoom, how their value skyrocketed. So you learn to adapt your product or service to the changing times. Don't fall in love with the idea of a product. Fall in love with solving or creating value for your customers and making their lives easier. And then know your numbers. It's very interesting when you speak to entrepreneurs and founders and they don't like numbers. I'm an investor, but I don't like numbers. But you need to know your key metrics, and you have to use it to lead the conversation. Because at the end of the day, as an investor, you're thinking of numbers. You're thinking of how does this translate to returns for me. So you need to know your number as your second nature, because this also shows that you're on top of your business. However, be careful with vanity metrics. I see so many people, tout around vanity metrics. Number of downloads is actually a vanity metrics. It doesn't show whether people are active on your platform. It doesn't show whether people are transacting on your platform. It doesn't show that people are deriving value because I can download an app and never open it. I, for one, do that a lot because I test new things. I'm one of those early stage users where I see a product I like, I see the value, and I try it out. And if I don't like it, that's the end of it. So know your numbers. Avoid vanity metrics. Identify the metrics that is most important to the investor you're speaking with. And that's why I always say, do your research, do your due diligence on the investors. Know what they are looking out for. Look at their portfolio companies. What was the deciding factor when they invested in these companies? And how does that translate to my own business? How can I lead with my numbers and lead the conversation with my number that it sort of helps them make a decision? And then lead with stories. Human beings are emotional. As much as people say, hey, we are logical as VCs, as investors, we are logical, we also are very, very emotional. We get excited when we see solutions that, hit the nerve. So while you have your facts and your figures, tie that into a meaningful story. I mean, frame your story in a way that it exudes passion, because at the end of the day, as much as investors are investing in the business, they're also investing in the person leading the business. So we want to see that passion, we want to see that. We want to be excited for you and with you. And then show growth and execute. I mean, you can have a great strategy on paper, But if you don't show the investor that you're already going out to execute, you most likely will not get that investment. You have to put in the work. Yes, I know various investment formats exist. Angel investors take bets on people. Even VCs take bets on people. But you must show some traction. You must show some growth. Whether it is a number of partners signed up, number of customers signed up, you must show that your go-to-market strategy makes sense and would actually you'll be able to execute it. Show that you've also executed in the past, because like I said, we're not just backing the businesses, we are also backing the person. So if you can show me that you have executed in the past and this is what you were able to achieve in the past, I most likely will believe you when you pitch a new idea of business to me. And this is very, very relevant, because you find out that first time founders struggle to raise, right? But second time, third time founders, especially those that ran successful businesses in the past, tend to raise much more easily, because there's a story. They can say, hey, we grew this business. Yes, it failed over time, but this is what we were able to achieve. So show the growth mindset, show that you can execute numbers, show that your strategy actually makes sense. And then have a team. A team is so important. The mistake I see founders make is they try to employ similar people or see people with similar traits into the team, but that's the mistake. We like to see a complementary team of people that can work together, that have the grit, that have drive, that has the experience to move the business forward. Like I gave an example sometime earlier about COVID-19. Nobody expected COVID-19 to happen, but we expect that when freaks of nature like that happen, you have a team that can think through your strategy and find a way to continue building your business in a way that would either sustain the business over that bad patch or create a new line of business or service that would help the company keep on growing. So your team is very, very important. You need to think through your team. Who technology? Who is driving marketing? Who is responsible for the strategic direction of the company? These are very, very, very important roles to fill. And then, launch fast, start small, scale slowly. Sometimes, what scale? People see it as growing exponentially. So scale slowly kind of sounds very counterintuitive anyways. But stop waiting for perfection. The mistake I see founders make is, I want to get my product right. I want to get my app right. I want to write the cleanest code. I don't want any bug. But most of the companies you see today, the Facebooks of this world, the Amazons of this world, the Twitters of this world, they started as bare minimum platforms of products. They didn't even start as what they were. Instagram didn't start out as Instagram. So stop chasing perfection. Instead, chase progress. So don't wait till your product is perfect before you launch, because there is no state of perfection, to be honest. Your startup is worth more while you're building than in theory, than on paper. And then the mistake I see people make a lot is that they want to be everything to everyone. It's impossible for you to do that. Target be precise, target the market you need to target, launch as fast as possible. For some people, especially those that are looking for investments and those that are driven by tech, we often tell them that on the short term, while you're trying to raise your pre-seed, seed, you're chasing some sort of profitability. So you're trying to make some money because you want to convince the investors. And then as you grow bigger, you now start chasing scale, numbers in terms of and in reach. And then number 9, choose your investors carefully. It's very, very important to do your due diligence on your investor, because it's a partnership. Yeah, it is a partnership. Find out if your investors align with your value, align with the direction for your business. I always tell people that not all money is good money. Because an investor is willing to back you does not mean that your business will not fail, does not mean that your life will be living hell, does not mean that you will not be extremely diluted in future rounds. So be very, very careful with the board. even as you're looking to promote your business or yourself to the investors, also do your due diligence on these investors, because if it's not a good fit, your business will definitely suffer. And my last point, follow up. It's so important to follow up, because as an investor, we find out that, I mean, we're so inundated with so much information, piles of email, piles of pitch decks, and then sometimes we miss out on really good businesses. Sometimes I have to go back into my mailbox and check out companies that I spoke to, and then follow up for updates and to ask, where are you now? What has changed? How are you growing and all that? Make it your second nature to always follow up. Because you don't get a yes now doesn't mean it's a no. Because it's a silence doesn't mean it's a no. Follow up with your updates, with your traction. Follow up for advice. You might get it, you might not get it. The important thing is to follow up till you get a resounding no. Okay? And then, oh yeah, my last point, be accessible. So it's one thing to try to promote yourself to investors, another thing to actually be visible. Are you visible? Does your LinkedIn profile show everything you do, your team, the business you're building? Do you have a profile on AngelList, Crunchbase? If I search you out, because one of the first due diligence tasks I do is to actually search out on the web. What do I see, right? You need to establish yourself as some sort of thought leader too. That this is just a cyber in the field that you are building your business in. But you have to be accessible. If I send an email, I expect to get a response, if not in 24 hours, in 48 hours, but not months after. Because as with investors, time is of an essence. If nobody hears from you, they move on to the next best thing. So it's very, very important that you are accessible. Thank you.
So much, Uwem. We have had a few questions come in, so can I fire away?
Sure.
The first one is, you spoke about aligning your values with your investors. Do you think that different generations should find investors within that similar age range, or is, their approaches to technology and getting into the market is very different? Do you think it makes a difference when you are considering your investors?
I would say yes and no, because investors are looking to maximize their investments, right? So they are looking for how to make the best out of their investment. And so if they see a business or a founder that can help them do that, sure. However, if you're doing your due diligence as an investor, you will find out that there are certain things they like and certain things they don't like, or certain type of businesses they fund. It will be crazy as a fintech to go pitch to an investor that is in agri-tech. He most likely will not invest in you. You probably get silence, crickets, or you get a no. So these are the certain things you have to look at. But at the end of the day, just keep on pitching, just keep on selling yourself. And like I said, find out what motivates the investors, and just lead with it in your stories.
Mm-hmm. Absolutely. And how does one raise capital during COVID? Has it changed the approach at all?
Well, what COVID has done for the world, right, is it has made people adopt remote. So adopt remote communication. And in a way, it has also helped solidify engagement, and I explained. Now we've moved beyond just sending an email and then booking a meeting offline, and that's that. Now you probably will send an email and then you have to send a follow-up, and then you guys chat on whatever platform you're used to. In Africa, me especially, we end up on WhatsApp or FaceTime, and we actually talk, and we talk about your business. So we end up engaging more on the business and things that are outside business so that I can have a clear sense of what we're doing. Now with COVID, we've seen that there's actually more people have gotten investments this year, quite interestingly. And the way we are doing due diligence is quite different. So we've been able to see you before. Now we're using more of third parties. We're using more of our contacts in the ecosystem. Say I want to invest in a company in Egypt, I have to reach out to all my contacts in Egypt. And then we talk about how you're doing in the ecosystem, what you're doing, what they think about your business. Unlike before, where I'll probably have to travel to Egypt and then meet you, personally, things have really changed. However, it hasn't slowed down investment. I think these are actually really exciting times because you can actually get a yes or a no very quickly.
that investors are sort of a bit more open to considering more entrepreneurs in this time? Is that a trend that you are seeing at the moment in Africa?
In Africa, yes, because we have a myriad of problems. There are so many problems to solve, and the opportunities exist. If you can identify the opportunities and sell it appropriately to a particular investor, they would probably listen to you. And you know, we keep on saying this, and it is not cliche. Africa is the next frontier. You're going to see an Alibaba trying to enter the African market and probably acquire one of the any of the logistic companies or any of the e-commerce companies. You're going to see Amazon begin to look into Africa, because I was reading a report yesterday about the amount of orders that come from Amazon into Africa through third-party delivery companies. So you're going to see quite a lot of that. So COVID-19 has been a blessing and a curse, but it has been more of a blessing to the entrepreneurship ecosystem.
And then one final question is, what are the fundamental principles of clarifying the problem you intend to solve? You touched on acquiring facts. Do you have sort of a recommended approach that people could use for this?
On a more basic level, go to where your potential customers are and to them. Now, it doesn't have to be a physical meeting. It could be on Instagram. It could be a group on Facebook. It could be a thread on Twitter. I mean, technology now allows us to engage with people through various means. It could be a WhatsApp group. But the very first thing is to be sure that the problem you're solving is actually marketable and people actually have that problem. You need to engage with them. And then secondly, figure out how this problem you're solving or the solution you're building is going to make either the life easier or it helps them do things faster. It's interesting. People tend to forget about price when you solve those problems. Make their life easier or do things tremendously faster. So yeah, those are the fundamentals.
Absolutely. It's about finding innovative ways to almost do your market research.
Yeah, that's basically it.
Technology at our hands. And then just to wrap up, do you have any top books that you could recommend to the audience? What are your favorites?
A book that is not entrepreneurship related, and that will be Year of Years by Sandra. People say, but that's not entrepreneurship related. But the fact is, you need to begin to say yes to possibilities, yes to opportunities, and go after it. Because I mean, on the African continent, there's so much no. Everybody says, no, this will not work. No, this is not going to sell. But if you have that yes mindset, you definitely would actually do way better than the naysayers. Then the Lean Startup by, I think by Eric Rice. There is a book that really talks about emotions, and I can't really remember the name of the book. Hooked by Nair Errol. I think I've misplaced the name, but Hooked is actually a really, really good book. Talked about how companies leverage on the emotions of potential customers to sell. Even made reference to one of the big companies in Nigeria called Paga. So that's a book that you need to read. And then the last book, and I really like this book because it is one of the things that I struggle with African entrepreneurs, is that they don't measure, they don't know how to measure. So that book is called Measure What Matters by John Dewar. Measure what matters is really, really important. The metrics you're measuring and you're tracking is fundamental to the success of your business. Yeah.
True. Well, thank you so much, Uwem, for that session. I think everyone has enjoyed it.